Hello, hello, hello. Welcome to the channel, ladies and gents. So this is a quick carryover from my podcast channel, which a few people have watched. Not many, but this is such a good piece of analysis that I want to share it with you all. Now, obviously, you read from the headline, the title. This is about the Disney earnings call. But this is an analysis from an investor. Some of you may know him as Mexican Iron Man, Mike. And he was very, very kind enough to do this analysis for my podcast, the Hcast. Now, again, not many people have seen it, and I do want more people to see it because it's a fantastic analysis, and he was so kind in doing it. So I will play that in a minute, but again, just as a quick one, if you didn't know, I have a podcast I run twice a week, Tuesday and Thursdays, and if you miss it, because it doesn't appear on the main channel after it's, finished going live, it has a second channel which you can find linked in the description box. But I hope you enjoy this analysis as much as I did. I was blown away by it. I thought it was absolutely fantastic work. So here you have it. Check it out.
What we should do now, ladies and gents, is move on to a pre-recorded segment from shareholder and investor, Mikey, the Mexican Iron Man. He was very kind enough to do this. He was on the call, listening. He's unable to be here right now because family time, basically. I don't want to reveal too much. It's not for me to say. But he obviously sends his regards, and he does have the link so he can get on if he has the availability. But we're going to listen to this now and then sort of discuss. So this is essentially a reaction, a thoughts from someone who has invested in Disney. So let's have a watch of this, guys.
Shout out to you, Mr. H. Nate. Great to be with you today, and all the panelists, all the people in live chat, and hail to the mods. Recording this video to give you guys a earnings call review of what happened with Disney. Fortunately, I cannot be there live as I'm vacationing in Orlando with my family, and we are today at the Kennedy Space Center. So I'm recording this before we head out, and just trying to cover all of the major things. So thanks so much for the invite. Thanks for inviting me. And I did listen to the call late last night, and then this morning put some thoughts together. So let's go over what happened. It was fascinating that in the pre-call, prior to the call, there were two things that happened. One is they made a major announcement, and two is that the stock started approaching $90 a share. Now that's significant because the stock has been languishing at or about 85, 86, 87, and it started taken up towards about $90 a share. And they also made a major announcement, or what should have been a major announcement. I'll get to that in a minute. Now, the overall theme focused on long-term growth, cash flow, and they reconfirmed that they're going to target to get a dividend done by the end of the year. It'll probably be modest, but that's what they were reaffirming. And I think what happened is that theme made the stock price sort of not crash as it might have otherwise done. Now, some of the highlights and headlines: their subs were down, their streaming loss decreased, earnings were a little bit better than estimated, but that's based mostly upon cuts and one-time write-downs where they charged off a bunch of items in order to create some profit. And then you'll see shortly that the stock ended down slightly. So prior to the call, it was going up. Now, the streaming losses came in at 512 million. So they lost 512 million in the last 3 months on the streaming platform compared to what they estimated that they were going to do, which was 777 million. So they lost less money. They still lost $512 million in 3 months, which is just astounding to me that you have any company that in any business unit could lose $500 million in 3 months. But yeah, that's what they did. Now, on the matter of the Hollywood strike, we need to remember that in June, Mr. Iger said that creative talent was demanding not realistic expectations. That got him in a bit of a heat for what he said, saying that the writers and the actors were not being realistic with their demands. But today's call, or yesterday's call, I should say, was a bit different tone. It seems that someone got to Mr. Iger and someone gave him some advice to have a change of tone, because he said, and I quote, "I have deep respect and appreciation for all of those who are vital to the extraordinary creative engine that drives this company and our industry. Yeah, right, Bob. Sure you do. When he did the CNBC interview, I think he was being comfortable, casual, and honest. And I think when he was on the call yesterday for Disney, he was being political, which Bob is known to do. Disney Plus, they announced that they're going to crack down on passwords, similar to Netflix. It's going to be a key component for the future for this premium platform, that they're going to crack down, guys, on those passwords, which I think is an absolute joke, because the few people that have Disney Plus subscriptions and share their passwords, I think once they locked down on this, Netflix had more subscribers, people paying to get that password and their unique username. And I think in the case of Disney Plus, they're either unintentionally stupid or intentionally moronic in terms of their approach to this, because all this is going to do, and maybe this is what they wanted to do, all this is going to do is get people to do the ad-based platforms, which is maybe what they want. Maybe they don't want people paying premium, which I don't understand that, because the whole point of doing Disney Plus in the first place was that they wanted a Netflix type revenue model where people were paying subscriptions in order to generate revenue, to generate a profitable streaming service. Anyways, let me continue on. In the last 3 quarters, they lost 11 million subs in Disney Plus. They had 157 million at the beginning of the quarter, and they went down to 146 million from the second quarter. So second quarter, they had 157 million. Third quarter, 146 million. That is a loss. If you take that 11 million loss, that is an average of 122,000 subs per day. Now, they were quick to point out a lot of them are from India and from global, less revenue per user, and that's true. But I just find it ironic that a year or two ago, all this company talked about a sub growth, and then now that they've got decreasing subs, 11 million. Think about that. That's 11 million less people are watching Disney content around the world in just 3 months. So they went from like being all about the subs to now they're trying to, in this call, they're trying to brush it under the table. Content spending, they will spend less significant going forward. They cited the strike and desire to spend less on unique produced content. I found it interesting that none of the legal issues, any discussion about the legal issues, federal and state lawsuits with Florida, shareholder lawsuits, all of that talk was avoided. It was just completely brushed under the rug, which I found to be quite interesting indeed. I'm going to go to the second slide now, where I have some more other comments that I want to share. And I'm sure you guys will have lots of questions. Hopefully, after this presentation video runs, I'll be able to dial in and answer some of your questions, depending on my mobile cell service. Anyway, Disney Plus, they're going to raise prices on premium ad-free content and Hulu. So all of the Hulu, all the Disney Pluses, everybody, any of you that have the service, all their prices are going up by more than 20%. And that's going to happen soon, October 12th. Okay, August, September, October. That's just a couple months away. 2 months away, they're going to increase those. And they're trying to get Netflix-like margins. I think they're going to fail because people aren't interested in Disney Plus content. The cruises doing well. They mentioned the growth. They've got 2 ships that are going to be added to the fleet coming soon. I did find a very slight little comment about Disney merchandise in the financial report that I thought was interesting, which is that they have a decrease in merchandise sales and revenue related to Star Wars, Avengers, and Toy Story. It's a 4% decline just in this quarter alone. So 4 out of 100 people, 4 out of 100 is that 4%. So there's a decrease of 4% in Star Wars, Avengers, and Toy Story merchandise sales. Gee, I wonder why, right? Park revenue. Park revenue is up 11% overall. International parks are posting the best financial results. Now, I thought it was interesting that there was no specific announcement about a company sale or any announcement about any of the particular assets. The question did come up in the Q&A session that I heard where they asked about it. And basically what Bob Iger did is he avoided discussing it. He almost said that, oh, it's too early to tell. He said it's too early to tell. And then he cited, you know, these things have lots of regulatory hurdles to jump over, which is true. But I feel confident that if you look at what's happened with other companies and the political climate in general, I think that they could find a way to hammer through the sale of some of Disney assets. In any event, it was not a major topic on the call, and Bob Iger just dodged it. In fact, related to all the hot issues, all of the hot issues were avoided. So the train wreck that has been the last two investor calls, the shareholder call that happened, and then the investor call from last quarter, all of the hot issues were avoided. Box office losses, lawsuits, culture war, theme issues. It was a very innocuous, kind of vanilla call. Bob didn't lose his temper. Bob didn't get any tough questions by any of the institutional investors. And the way in which the report was written and the way in which the questions in the Q&A were answered basically avoided any and all hot takes. And I think someone from the PR and marketing department and legal at Disney clearly got to Bob. And in the wake of what happened with the CNBC interview, where he had a lot of hot takes, and in the wake of other things that have happened, like the strike announcement and all of that, I think someone that has got to him. So it was a very moderate vanilla box tone. Now, what I will now mention is this. We've got to remember that at CNBC, he announced that he got a contract extension. In this call, he did mention and reference that that they're still looking for a successor to replace him. And before the call in the morning, there was an ESPN press release announcement where a $2 billion deal was announced with Penn Entertainment to launch ESPN Bet. It's going to be a branded sports book. Penn will pay the media giant sports arm $1.5 billion in cash over 10 years to rebrand its current sports book and relaunch as ESPN Bet. This fall, in the 16 legal states where this is allowed, ESPN will be granted $500 million of warrants and purchase around 31.8 million common shares of Penn stock in exchange for media marketing service and all. So it's a $2 billion deal, and it's structured with a 1.5 cash and 500 million 500 million related to stock warrants. So that announcement happened before the call, and that may be part of the reason why the stock started going up. But after all, if we look at what happened with this call, overall, what's happened is that Disney as a company missed its quarter 3 revenue by 180 million. The revenue was 22.3 billion. They did beat the earnings expectations by $1, and they're basically announcing $1.03 per share. But almost all of that comes from cuts, cost savings, and one-time write-downs, like writing off investments that in assets where they just literally took the loss. So whether it's Star Cruiser or whether it's some of the stuff that we saw with Disney and Willow, they're all write-downs in one time. So they're just cut, and that's how they're generating that earnings per share. They're not generating earnings per share based upon sales, effective operating costs, and good old-fashioned net profits, which I find interesting. The stock at the end of the day closed at 87.49. That's as of yesterday. And then after hours trading this morning before the market opens, it's at 87.49. I don't know what it's going to be. Maybe by the time of the live stream, Nate or one of the guys on the panel can bring that up and we can check that and see where the price is at this afternoon. But overall, the stock wasn't punished from this, at least not in the first day from this. It also wasn't rewarded. And I think the institutional investors, all the people that asked the Q&A, Wall Street, are giving him another 3 months to see where this thing goes. And I to be honest, Nate and team, I'm in shock that this stock is even in the 80s. There's not one thing that's going right at this company except to overseas parks and cruise ships. Everything else has a problem, and that problem is major. So with that, thanks for having me. I'm sorry I can't be there with you live, but family is the priority, and hopefully this special report leads to a great conversation. And my shout out to everyone in the chat and everyone on the show. And my congratulations to you, Nate, and the panel for having this amazing show on Tuesdays and Thursdays. You know, you talk about it being your favorite podcast. It certainly is my favorite podcast, at least not for any of the shows that I'm on. But I make time to tune for it. So I love being a member, and congratulations on all the great work and the growth of the channel and the show. Thank you.
Well, what a bloody great analysis that is from Mike, Mexican Iron Man, someone who, you know, was on the call. That was bloody brilliant, that was, wasn't it?
Yeah.
That was
Shout out to
fantastic.
Mike.
I mean, you are not going to get a better analysis in any industry professional trade, whether it be Hollywood or the financial services, anywhere than that. That was the single best you're going to get. So a massive thank you to Mike.
I think the only thing Mike is more thorough with is married women. So there you go.
Jumping out of windows.
Well,
Dear, oh dear.